Greetings and salutations. It's Dave Duford. We're doing it live. It's April 7th, 2025, and you're back to another Ask Me Anything as far as all insurance sales and marketing questions go. Live event. It's a pleasure, as always, to be here. So if you're new around here and you're wondering how this live program works, here's what to expect. You are encouraged to ask any and all of your questions as it relates to selling insurance and marketing insurance, including script questions, training questions, questions about the DIG agency, questions about really anything in the industry that you're questioning, worried, or just have questions about. This is the time to ask them. And for those of you who are watching live, you're welcome to throw your questions in the chat, and then I will be more than happy to address as we get going and up and running. So as I go through the list, I'll make sure to answer everything that gets presented to me. And if you're watching this live or on a recorded version, please consider subscribing if you haven't already. If you'd like high quality insurance sales and marketing training, I give away like 99% of what I've learned over the years entirely for free to you without ever having to worry about paying me for anything or joining my agency. And then also, if you do find that you enjoy the content, please smash the like button. That really helps YouTube share this content to other insurance agents. There's a lot of MLMs, scams that are out there, and people need to hear honest, really good content that will help them in their career. So if you think what I just described is true, hit the like button at some point, okay? All right, thank you, Chris, for putting your questions in the chat. Keep it up, guys. Now, before I get to the actual questions here in the chat, I am going to go over, I think, a very topical, news-relevant topic, and that is the tariffs. We keep hearing about the Trump tariffs and its impact on the economy. The Dow Jones and other stock market indexes are tanking. They may not be right now, but they have over the last couple of days. And I think some of us are wondering, maybe you're new to the business and wondering, well, how are the tariffs going to either directly or indirectly impact the insurance sales business? And what I'm going to try to answer here, just kind of as a starting topic, is what my thoughts are as some dude who works out of his house that's been successful in the insurance business, at least in the life insurance category of things. I'm going to give you my opinion. Again, it's opinion. I'm not a professional economist. I'm a salesperson that runs a business. I'm going to give you my opinion, how I think more on an indirect basis, how we're going to be impacted as insurance agents and as insurance agency owners, with the hope of giving you some perspective, again, from somebody who has been in the business, who's been through several contractions in the economy and has experienced the outcomes of those. So take it for what it's worth. We're going to go over the different most common niches that are out there, and it's, I think, the impact itself on what we'll see the tariffs getting enacted will do. And then I'm going to go over the business of insurance sales from a recruiting standpoint and why I actually think it's great for business. So first of all, how will property and casualty be affected? If there are tariffs that increase the price of goods that come into the country, such as the different parts that are associated with car insurance or the car itself, as well as home owners you could throw into there too, the parts of building out a home. If prices go up and replacement costs increase, then it's likely you can expect some sort of increase on the actual cost of insuring those homes or the actual vehicles themselves. So it's likely, I think it's not a stretch to expect premium rates to increase to reflect the increased cost or inflation pressure on the cost of replacement itself. Same thing with final expense. It's arguable if, and I think a lot of these funeral caskets themselves are not necessarily all USA based. If they're sourcing components outside of the country to build these, or entirely having them manufactured outside of the United States, you are likely going to see, depending on where, of course, the units themselves are built, an increase in the cost to get buried on top of the increases that we've seen just over the past 15, 20 years. Which means to cover effectively those costs, assuming all else is equal, which that's another kind of unintended consequence you may see. People may change their buying behavior, not necessarily accommodate the prices, but change their buying behavior. We'll get into that in a second. You might see a higher cost point to die, which may, which I don't arguably think so, and I'll explain why, contribute to a higher premium. Again, all else equal. So now here's why I'm actually not too worried. I want to remind you out there, I don't care what your political affiliation is. This isn't like a Republicans versus Democrats assessment. I have no care to discuss any of the politics behind this. This is strictly a business type of program we're doing here. And a reason I say that is because I want you to extract yourself from the news cycle. There is a lot of always in these circumstances, some level of fear mongering. There's some level of scare tactics going on. There's a lot of clickbait to get you entranced in the news cycle. You are a product that people sell news to you to absorb and to consume. Please remember that regardless of what is said. All of this, to some extent, is designed to make you afraid, gaslight you, etc. But I want you to take a step back from this and to think about the impact and how it may affect, in a more sober light, the actual business itself. This is what my thinking is along these lines. Regardless of if there is a tariff and if it's a negative impact on the economy, my question to you is this: how does this change the consumer's appetite for all things insurance? Are people going to buy less insurance? I don't think so. I think what we'll possibly see happen is a realignment of the kind of insurance that they buy or the amount of insurance that they buy. And that may be impacted more or less depending on the demographics that you are selling to. So I don't see people dropping car insurance and riding around without insured vehicles. In a lot of states, it's required. So I don't see a lot of impact economically to that particular market. We may see people more aggressively shop their rates and to get a better deal or to cut out certain aspects of the insurance. And that might happen, but the volume of sales may not necessarily change. It may continue to go up, as I think it will with the population increasing and more people driving. It's the same thing on the life insurance side. I don't personally see, when it comes to final expense, which is the niche that, of course, I focus on, really things changing. And I'll give you a couple of reasons why, plus some historical anecdotes. So our clients are on a fixed income. They receive a fixed check from Social Security or disability every month on the same day or earlier for the rest of their lives until they kick the bucket. And not once has Social Security ever missed a payment or reduced benefits. And I don't think that's going to happen, even with all the DOGE concerns about cutting back the government, because I think I read there's like 61 or 69 million Social Security benefits right now. Imagine if we cut their income by a fourth. Do you think that some of them would trade allegiance with the other side of the aisle to elect in people that would restore and maybe increase their benefits? I think so. Historically, Social Security has been the third rail. So I don't see a lot really getting impacted from a negative standpoint on the benefits of seniors. Likewise, I don't see the need for what we're selling changing. And what I would imagine, again, this is just anecdotal, is we would see a reshifting of how one's money would be spent if for some reason burial expenses got progressively higher in a short period of time. I think some consumer sentiment would shift towards maybe putting that money towards a cremation instead, to getting the end result being, I'm dead, what are you going to do with my body? Maybe shifting from a burial to a cremation, or maybe downsizing from, an elaborate funeral to a more simple funeral. So I think people will shift how they spend their money in regards to the outcome of whatever happens with these tariffs. But notice what I don't think is going to happen is the total termination of the business model. I don't think insurance in general is going anywhere. And I think certain niches like final expense are still socioeconomically posed to grow. And I'll give you again some anecdotal evidence to this. And this is history. History doesn't necessarily prove what's going to happen in the future. But I got started in the midst of the Great Recession back in 2011. Final expense was going strong then. It was going strong into the Trump election, throughout the Obama administration. It probably arguably picked up into an interest into the Trump administration. Then when COVID hit, and we saw in some sense, the economy constrain or contract, actually final expense went up even better. In times of uncertainty and certainly fear of death, people buy more life insurance. It's just what you think about under duress and stress. And final expense has been going strong. Now, I think there's been some sort of contraction. Again, this is just anecdotal. A lot of carriers have left the market, but I think that because there was a huge run up prior to the deflation or contraction out of the market, carriers got into this business, didn't know what they were doing, did not understand the market, and then a lot of them have exited because they just didn't. They rode the higher level of interest from about, I would say, 16 or 17 to about 22 or 23. But other than that, the underlying demographics of final expense are not going to change. You can look at the level of people aging into the age where they concern themselves with final expense preparation. That's increasing 10 to 11,000 a day. People are going to end up with less money, meaning less financial resources to pay cash or to pay off a burial expense early. So therein lies the need for final expense coverage. And one of the cool things that we can do, if you're new to this business, then you don't understand this, you're not fixed. You don't have fixed costs in final expense as a salesperson. You can sell a plan that is less money to make it more affordable to the client. You're not fixed like with some products out there where the cost to build or to make the good, there's a floor to it. If you sell it under that amount, you're losing money per sale. On the final expense policy side, that to create a policy is effectively, there's obviously underwriting costs, but beyond that, there's very little. And you as the agent don't necessarily have to carry the cost. Of course, you have to pay leads if you do that, but if you get them for free, you don't. And so you can just accommodate by lowering the premium. You can just sell a smaller policy if, let's say, somebody's so constrained with their budget. So the reason I say all this is because there's a lot of fear out there. A lot of people are upset and worried about different industries. And there certainly is absolutely the cause for being concerned. I don't see it being the same for the insurance business at large, and definitely not the case for final expense. This is as if you're a new agent. This is why it's critical to pick niches that are recession resistant. Okay. And speaking of which, this is why I am, like I said, very bullish on the final expense market, because it has grown regardless of what has happened in the past. I won't say it's recession proof, but it is resistant to some of the bad stuff that's happened, economically speaking, where other industries have got creamed. Final expense has just gone on its merry way. Our clients are still paid money. That I don't think I'm willing to, you never know, but I'm willing to gamble on that. The idea that our seniors get their Social Security taken away and thus their ability to pay, it would just mean political ruin for whatever party does that, like guaranteed political failure for the foreseeable future. Nobody's willing to take that risk. So I don't see us, losing my clients losing the ability to pay their premiums. Probably will be even better because the population of seniors is growing from, I think it's like 11% to 17% of the population upward to 2040. And then again, the underlying trend of people getting older means that more and more people are going to, as a percentage, get interested in this product. How they buy it and to what degree, of course, will be affected by these things kind of indirectly. But ultimately, I just think this business is a safe play. And I can't stress enough, this is what I found out when I first got in 2011. I had a personal training gym, which is entirely discretionary. Nobody needs to have a personal trainer. You can work out at home. You can buy lesser expensive options. And that's actually what people did. And that's kind of my motivation and thinking here. I don't think people didn't stop working out. They just didn't spend $500 a month on group personal training. They just spent $150 a month at a very large group, gym, and they just saved money. and didn't spend it. And I think that's what you'll find here is just a reallocation of money spent in a different way. And final expense proved to be very consistent in each of these upheavals economically. And my hope is and thinking is that that's probably going to be the case here. But not all business models may be like this. You may see some pressure on, say, the term insurance market or the younger market where people may lose their jobs. So be very thoughtful about what you choose to sell from not just from its capability and opportunity today, but what it's going to look like the next 15 or 20 years. You really want to look at this business as a career-based model, meaning what's the overarching direction that this business is going, not just from quarter to quarter, even administration, but what are the socioeconomic factors that underlie it? Because that's going to, I hope, show you which business models are safer. There's no perfect business model in the insurance business, but some products I think offer a level or a degree of higher level of safety than others. So keep that in mind. Okay. All right. I hope that gave you some perspective. Hit the like button if you enjoyed this. We're going to go to the questions in the chat. And I'm happy to follow up on the tariff stuff to the best that I can to give you my thoughts, opinions. If you have questions, how can I generate free leads as a 23-year-old brand new agent doesn't have all that much money for leads at all? So a couple of ways. One, you can just join an agency like mine, shameless plug, the DIG Agency. We provide leads for free to agents. So you just have to worry about getting on the phone and working. If you're not interested in that, other methodologies that have worked well are doing seminars where you go in and do lunch and learns, free trainings on maybe burial preparation. I used to do those in senior facilities. Those worked pretty well. Lunch and learns also work well in Medicare, health insurance, probably in other markets as well, where you just educate, and that's really the best way to sell and then get great prospects that way. You probably have to do several a week to make it effective and to scale and to get enough prospects to talk to. But that is something that's very probable and good to learn. If you're interested in getting my seminar marketing strategy, I have it for free. I'm going to throw it in the chat. You can go to davidduford.com/ISS. That's my free insurance sales success training site. You can register for free, no cost whatsoever. And then when you're there, look in a classroom, look for the seminar marketing strategy. That's what I used to do when I did seminar marketing. It works pretty well. A lot of agents have used and having good success with it. Thank you, Chris. Cheyenne, hey, can you explain the different ways to start and the different lead options? Okay. Start selling insurance. So, that's as lots of different ways. My advice is to figure out what your level of comfort is with a straight commission basis pay. If you're not comfortable getting all of your earnings based off of sales, then you should probably look for an insurance agent job that pays a salary plus some sort of bonus. So figure out how you're comfortable paying or getting paid. And then from there, the next thing is find an agency that's going to train you to sell, not to recruit. I'm not a big advocate of the MLM model. It does bring a lot of people into business, otherwise wouldn't, but a lot of the resources necessary to train them to be successful just aren't there in the MLM models. I prefer agencies that train you how to sell insurance successfully, because if you have that skill set, the sky's the limit. And that's how you survive in the business, is learning how to help people and sell them a policy. Beyond that, make sure you join an agency that will continuously support and mentor you. Go back to like what I was describing earlier in the tariff conversation. Pick a product that you feel very enthusiastic about or you like, and ideally isn't as exposed to the negative aspects of a bad economy. And then get started. Now, in that process, you should also be learning for that product you're interested in what the common ways are to generate leads. For example, the way we do leads at the DIG Agency, largely off of Facebook, that may not be the common way to do it, say at New York Life. That might be more of a friends and family approach or a cold calling approach. So part of this decision on what you're going to do and where you're going to work is also based off of what can you do comfortably when it comes to working leads. I never would have sold insurance if I had to cold call or sell my mom and dad insurance from the beginning. So you have to think about and consider the lead processes. And typically, as you figure out what products you're interested in, you'll start to learn about the lead options too as well. Okay. All right. So hopefully that helps. If you want to follow up with anything, let me know. All right. Hey, Ormond. I've sold Medicare Advantage programs for years. So I would like to transition to final expense. Can I work 20 or so hours a week and generate a solid income? Solid income is different for different people. I think you can develop a good income if you're actually on the phone for 20 hours and you give it a full-time mentality, even though you're on a part-time schedule. We support that at my agency. I think it can work well. And honestly, I started part-time too, and I did okay. I wasn't making like 10,000 a month, but I was making enough money to show myself, well, if I was full-time, I'd make a lot of money. So I think it's possible. Ultimately, you can start it, and if it isn't, then it isn't, you know. But the potential is there. James, hey James, can part-timers join? Sure. 3 to 4 days a week, live program. Yeah, absolutely. We definitely support part-timers. Absolutely welcome. Thanks, James. Hey, Miguel, good morning. I have an appointment in the States with Aetna and Continental. I work for a call center selling Medicare, but some states show appointment with these companies with accident and health. Some states say accident, health, and life. Well, if you've got a life and health insurance product and or license, you're fine. Sometimes they just appoint you to multiple ones. I don't think it's really an issue because you wouldn't have gotten appointed if it wasn't eligible anyway. Hopefully that makes sense. I wouldn't worry about it. All right, Authority. Hey, Authority Pictures. I'm waiting for my license. Yeah, California's terribly slow. I'm sorry. It's like 30 to probably 45 days now at this point. It's just atrocious. While waiting, I'm getting things together and ready. Do you have any recommendations for a wired headset type? Not off the top of my head. I'll chat if you can throw in a recommendation on a wired headset, feel free to. Um, I would think anything from a brand name is good. Probably 50 to $100 range. Ed, hey, are there any retirement benefits renewals working at free lead program? No. We don't have retirement benefits and we don't have renewals as a free lead agent. However, if you want renewals after you get up and running in free leads, we can facilitate you to go broker, which only means that you now get paid more per sale, but also have to buy into the system, the CRM, dialer, and lead management system, and pay for your own leads. But in exchange, you get more commission per sale and you get a renewal stream on that book of business that's now yours. So there is a process that to facilitate to get there. But the reason we don't do that in the beginning is because what we found is, and I've done this for years, this is my experience. People who start in the business largely have never done business before in the final expense business. They've never run a business, and dropping $1,000 a week is extremely emotionally stressful. And those emotions cause bad decisions to happen. And people tend to lose more money than make it and fail out of the business prematurely. Whereas in our system, since we handle the bulk of the expenses, all an agent has to worry about is getting good at selling. And after you do get good and make money and you save it, therein lies the opportunity to move to that higher commission level where you're handling all the cost. If you so desire, you don't have to. But we found it's a better outcome for more agents. I mean, our production last year in our first full year in free leads was just shy of 8 million. In no prior year before that had we ever reached even half of that from a broker standpoint. Um, that's pretty amazing. So it goes to show you free leads facilitates more success, in my opinion. And so that's why we do that. Thanks, Chris. Hey, Deborah. Deborah, where'd you go? There you are. How long does it take to get trained up as a brand new agent? Yeah, I mean, for me at the DIG Agency, couple weeks, 2 to 3 weeks. It depends on your level of training and desire to apply the training. Some people take longer, some people shorter. Um, I think in a simple one call close product where you're selling a life insurance product like Final Expense, it shouldn't take that long. It's not a complicated product. Now, something like Medicare, less so ACA, it's a more of a technical sale. You got to know all the nuances of the different plans, certainly of how Medicare works, how ACA works. Excuse me, that may take a little bit longer. So it just depends. Early riser for a free leads agent with DIG, how much can our as earned monthly checks get from the held back commissions to be paid months 10, 11? 12. You have to simplify that early riser. It's a little confusing. I'll catch you up down here. Megan asks, good afternoon, David. Watch your video on required viewing. Had some questions. One of the companies you mentioned recently put out a new product. Is there a way to make sure they can't come back before the end of the 2-year incontestable period, write the policy well enough they can't cancel it? Ah, okay. Yeah. If not, if you were in your first year selling, how much would you set aside for chargebacks? Okay, so what you're talking about, just for the audience sake, Megan, is a lot of carriers initiate what's called the Plan F, and essentially it allows you to look back at a policy that's been approved and to see the current medical history. And if something was missing that would have not allowed that plan to be put into force, the company can go back and cancel the plan, refund the premium to the client, and then you get stuck with a chargeback. The problem with that, obviously, is that, first of all, it kind of ruins the concept of what we're selling, which is peace of mind. What if the client's health worsened and they can't qualify for anything? It's a terrible idea, in my opinion, just from the sanctity of what we're trying to sell, which is peace of mind. The other, and my take on it is, I think the insurance company should just price that risk in, as opposed to risk, basically saying everybody's got a 2-year wait, or what I'm selling you today may not actually be good. Like, I don't like that. I mean, for obvious reasons, we're selling peace of mind. The other side of it too is that most of the time this is initiated very near the 2-year mark, like months 20 through 23. Because after 24 months, the carrier cannot do this. They can't go back and renege on a policy. So I try to stay away from as much as possible. It's impossible to stay away from it completely, but I try to stay away from a carrier selection from carriers that are going to pull this kind of stunt. I don't think it's fair to anybody involved, and I'm sorry the clients don't, or the carriers don't have all the information. But I would say, well, what does that say about, from a carrier standpoint, if you're promising peace of mind and full coverage, but willing to renege on that? Like, it's stupid. And I understand why they do it, but I think it's in a sense unethical at the same time. All right. Oh, chargebacks. It's hard to say. I mean, my general recommendation to you is save more than you spend by as a high degree as you can, live poor even if you've got a bank full of money. The more cash fund that you have from your proceeds of sales, the more you're going to be able to absorb chargebacks, weeks where you don't make much in sales. So I think just as a general rule, save up as much as you can. If you're always writing consistently, your new business as a portion will tend to take care of the chargebacks. But in general, the general rule applies. Just don't spend a lot of money. Save a lot. What are your opinions on moving money into an annuity during an economic downturn? I know some agents are against it. I don't know. It's just going to be, I don't really, it's in a sense, I mean, look, as a consumer, if I'm sitting at what I think is the top of the market, it might be a good idea to move my money into more certainty. You see that with people, the price of gold going up. I'm sure people are moving their money into treasuries and more historically stable asset classes. And you could probably park money in an annuity with the same concept in mind. So I think it's a good reason why to meet with your clients. If I were selling an annuity, I'd be like, hey, have you seen what the market's been doing? Are you concerned? Well, let's talk about maybe a way to get rid of this volatility and have some consistency. So, and people tend to be reactive about this stuff. So, like, if anything, it's a great opportunity to create meetings and conversations to maybe move the ball down the the, the field further on making sales. Hey, KP, if I join a DIG agency, is it inbound calls or outbound? And if outbound, do we use an auto dialer and manually make dials? Yeah, thanks, KP. Okay. It is a combination of both. So as new agents, you're going to get a good mix of outbound, but also inbound. And the reason you get a mix is because, first of all, the most effective lead to use for good agents is outbound. You can just have more conversations statistically than waiting on inbounds. It's a huge issue with inbounds. Um, but I will say, just for transparency's sake, I think this is important to mention. As a new agent, we don't dial you up to the most amount of inbound or outbound presentations you can take. Our top agents wait about 30 seconds between conversations after they end one, which is remarkably fast. However, the agents getting started, we slow their rate of presentations down so that you have time to review your sales calls, to get some feedback from our resources, so you can see what you did right and what you can improve. It really is a training learning period as much as we're definitely trying to help you make some money and make sales. But if we throw a bunch of leads at you and you keep screwing up, we blow through a lot of cash that could have been converted, leads that could have been converted, and waste a lot of money. And then you don't get any better either because you're not slowing down, getting some proper feedback. But it's going to be a mix of both. The way our dialing system works is we use Convoso, and all the dialing takes place in the background. You don't know if you're getting an inbound or an outbound. You just are notified with a sound or a visual that says somebody's on the line, and then you go into the script and start pitching. It's almost like an inbound experience, even though some of the leads may be outbound. And it is an auto dialer. And building on top of that, we follow all TCPA compliance. There's plenty of express consent that we can auto dial, all that stuff, if in case you're wondering. Manual dialing is a terrible idea in this business. Like, it just doesn't work at scale. Is there lots of idle time where we can't get people to answer the phone, or are the sales opportunities continuous? Yeah, hopefully I explain it. I can better explain it if you'd like me to. And what type of metrics are we evaluated on as agents? Yeah, I mean, close rate is total sales in a sense. It's going to be a measurement of, in the beginning, is can you make sales? We want to see that you can make sales. We're also measuring things like, are you improving the things that we suggest you improve? Like, one of the quickest ways to fail out of any business is to not take coaching and not apply it immediately. So a big deal with us is immediate application of the training that you're going to be receiving on an individual basis. And then as you're making sales and we see that you're making sales, then we're going to ramp up your lead flow so that you have more exposure. And I tell everybody this joining, we play favorites. We absolutely are going to favor the people who are closing and producing. We will want to make 100%, 1000% sure that the closers, the people who are producers, are getting the best leads, they're getting the highest frequency of presentations, and are staying as busy as they want to. You don't have to necessarily work 50, 60, 70 hours a week. We have some people who are great producers that put in 20, 25, 30 hours a week. We can't tell you how many hours work because they're 1099, but we do measure all these things and want to actively put you into that elite range where you're just always busy taking phone calls. But you got to work your way up into it. And that's why we have this intermediary beginning period where we want you to get constructive feedback, analyze what you're doing right, what you can improve on so you can get better. Hey, Bruce, what is the average monthly income of the DIG free lead agent currently? I don't know. I don't have those numbers. I believe I will be getting my life and health insurance in the near future. Oh, let me add on this too. I don't think it really matters what the average is, because the truth is that in all sales models across the nation, whether it's mine or somebody else, the top 20% do 80% or make 80% of the income. And anytime you ask what the average is, it's always going to be way less than the top 20%. What you want to strive towards is the top 20%. The average generally isn't going to be representative of, I mean, the average is average, but there are no sales organizations where the average is 10 times higher than, the average, if that makes sense. Hopefully that makes sense. My point is what you should be thinking and striving towards is, how can I be in the top 20%? Because that's where the real money is made in any organization. I believe I will be getting my life and health insurance in the near future. I passed my tests and I'm just going through the process now. Are you geared up to accept new agents who want to go whole hog as a newbie? Yeah, oh yeah, absolutely, Gene. That's kind of our normal person who applies, or people who are brand new to the business. Happily recruit agents to us that are brand new. Also been watching you for years. Thank you, Say. You and Cody Askin made me a lot of money. Great. Thank you. Appreciate it. I use the Logitech. Thank you, Jim. Appreciate that. Hey, Linda, I'm in the middle of an onboarding and need access to Slack link to access the alternative forum. Linda, if you can reply back to any of the emails that you're getting from us that are reminding you or kind of walking through what to do, that's the best route. Um, if that doesn't work, any of the emails like the reminder one for this, you can reply back to that, and then I'll connect you with somebody in my team that can help you. Sorry about the delay. Hey, Cheyenne, what's the average commission per sale on the free leads? The average commission per sale is, it depends on what you end up selling, but probably 250 to 300, give or take. That's the upfront cash flow. You can make a little bit more on the back end in months 10, 11, 12 as the as earned money's coming in. Now, if you're an elite agent, your commission level isn't 40%, it's 60%. So the average sale there on the front end is probably closer to 350 to 450 per sale, and the ability to make a little bit more on the back end. Hey, Kenny. Hey, Guam. Been doing this for about effects final expense for about 2 years now. Compared to the learning final expense, how would you compare learning Medicare? How hard is it Medicare to understand? I think it's probably harder, but I don't think it's outside of the realm of learning it. I mean, think about it. Medicare, you got to learn how Medicare parts A, B, C, and D work. You have to be able to clearly and concisely explain that to the client. You've got to be able to navigate the different options and carriers that are out there. And in my opinion, it's more of a service-driven type of product sale. Since it's renewal based, you have to be of service to your clients to keep those clients for the long term, because that's really where the money is. And you got to keep them on longer than one AEP period. But I think it's not that complex, but more complex than final expense. Hey, Early Rise, just wondering how big our monthly checks from delayed commissions can get. Oh, okay. So from the back end money, it just depends on how much you write, right? I mean, if you're placing 20,000 a month, then and you're at that point, you're probably at a 60% commission. So that means 15% of that is on the back end. And assuming you're active, then you're looking at probably 2 to 3,000 on the back end, on top of the production from income you're writing up front. So it can be good. It can definitely be significant. But of course, it's all dependent on how much you write. I'm contracted with the DIG broker, Cam, but had to step away from my family. I told Marty during the hiring process, am I still good to go with the carriers I've been contracted with? Send me an email, please, if you don't mind, Cam. Shoot me an email. Any of the ones you get from me, reply, and I'll give me a little more context, and I'll tell you what. Megan, 25%. Let me know what you mean by that. I think you may have written something up here. Yeah, you can do 25% of your money saved. I mean, the more the merrier, always. And any type of straight commission business model, like, you really cannot live hand to mouth. You cannot spend everything you receive. You have to save and put back as much as possible. Like the way a lot of agents, and this is why we do free leads, because on top of bad weeks where you don't make money, as a broker, you buy leads and you have to consistently buy leads. You may be spending $1,000 plus a week, not to mention the cost of all the systems associated. And if you don't have money in the bank to weather the bad times, you're out of the business. This is why the free lead program is so appealing to so many people, because we remove that financial burden of buying leads. You still have a straight commission, but for a lot of people, it's a lot more manageable financially and psychologically, which plays into why it's so effective. Yeah, you manually dial. So you should look into doing Dig Dialer, digdialer.com, shameless plug. Manual dialing, there's nothing wrong with it. The problem is that now the carriers are really monitoring your dialing attempts, and they may put you as spam likely or telemarketer likely. And the other thing is that, and you don't necessarily have a process in place to remove that if you're manually dialing, at least on an automated basis. And if you're calling into different area codes, it's arguable that an outside area code may restrict the amount of pickups that you otherwise would get. So a good dialer like mine, digdialer.com, you have multiple phone numbers. The numbers are rotated so they don't go bad and have spam likely or telemarketing likely. They're sat out and screened through if they end up that way. and then put back into the system after they're cleaned and scrubbed. It's a brilliant system, and for us at least, saying this is the big selling point for why I used, and this is with Convoso, but you can't get it as an individual agent. You have to buy 20 seats minimum, but we can sell you a seat, an individual seat, which makes it attractive. But the big reason we went with the product is that we saw a 300% increase in pickup rates. And that's just money. That's less leads I have to buy to get the conversion rates that I need. So I can't stress enough how important it is. By the way, hit the like button, guys, if you haven't already. Please consider. All right. If a new agent follows your training program, what could they realistically expect to receive first week in commissions? Yeah, I don't mean to be like avoidant of commission problems, but like you're on a straight commission. I don't know what you're going to get. I mean, you may have a little policy sale, you may have a large policy sale. That affects the income that you make. Um, it's just really hard to say. So I don't mean to dodge. It's just like I don't like giving guarantees on income or like having specificity put into place. I can tell you how much you can make per sale, like I did earlier. Like that's a good range to expect. But how many sales of those will you make? I don't know. I mean, it's not to mention it's entirely skill set based, and some people do very well, some people don't. So, but the potential can be very good if you are good. I think Marcus closed on 20 hours of calling. He's an exceptional agent. This is not the norm. I think he closed 13 or 15 policies this week. I think the next guy closed 10 to 12. I don't know how many hours he dialed, but I mean, the potential is there. We keep our good people as busy as possible. So let's continue. Okay. I passed my life and annuities exam a few hours ago and watched you guys' video over and over. Great. Thanks, Alexandria. Or is it Alexandra? Excuse me. What approximately can the top 20% make monthly? Yeah, I can give you a rough estimate. Probably, I think in a free lead program, six figures is potential, for sure. High five figures, low six figures. Are people doing a quarter million plus? I don't think so. Not on a free lead program. It's possible, but they'd have to just like crunch out tons of premium every month. So to me, the income, a good agent, again, being very generous here, wide. I mean, I would think a high five figure, low six figure income is realistic for a good agent. That's what I would want to earn if I was going to do this business. How many states are new agents required to be licensed in? Right now, Deborah, it's 12. Eventually, in the next couple of weeks, we'll roll that back to six. But go forth, assuming you're going to buy 12. We haven't really rolled out the updates to the states yet, but I'm kind of letting the cat out of the bag. We'll let you know which ones, by the way, as you start onboarding. All right. Okay, getting to the bottom here. All right. How many states are new agents? Sorry, I answered that. Hey, say, when it comes to training new agents, what are the 3 tips that you would give to ensure their success? I can't ensure your success. Again, I hate to be splitting hairs here. I just don't like to lie like a lot of other people and say anybody can be successful in business. It's not the truth. A lot of people can't for a variety of reasons. But let me answer the other party question, which is a good question. If there were 3 things I would tell you to focus on to maximize your chances of success, what would they be? First of all, work as much as humanly possible. The more you're swinging the bat at the plate, the better you're going to get faster. I do jujitsu, and one of the better ways to get better at jujitsu is by doing what we call rolling. It's like actually getting on the mat and wrestling. And, it's going to be hard at first. It's going to take a lot of effort, but your rate of improvement will be very good if you're out there doing the work. Likewise, in final expense, if you're just on the phone, applying what you've learned and working and putting the time in, you're likely going to get better faster versus somebody who is not doing that. The other thing that you need to be doing, very, very important, is applying the coaching and training immediately. This is a big issue with some people. They are told to do something or suggested to do something for their betterment to get better results, but then they don't apply it, whether it's out of fear or resistance. It doesn't matter to me. My point is just do it. We've coached hundreds, if not thousands, of agents at this point. If you just do what we teach, because we know what to do. Likewise, with the other agencies you're with, assuming you're with a good agency that's had the track record of success, just apply what you're being taught and take it. And you have to take a leap of faith sometimes because there may be, no, it's not that what we teach or sometimes some agency, it's just an ethical issue, but some people get wrapped up with like, why should I do this? Or I should do it this way. Don't forget that. Forget the why. Just do it. Sometimes you won't learn why you do something until you apply it and then it makes sense. There's things in sales that's how I thought for years until I saw the other side of it. And looking back, if I just did what was this was suggested to me years ago, if I just did it, I would have understood why it works so well. So don't let your brain get in the way. Apply the teaching, let your ego to the side, and the faster rate in which you do that, the better. I think beyond that, um, the last is just find an agency that's committed to actually helping you become a top producer. A lot of them aren't. They're more oriented towards recruiting people to recruit, more of the MLM style of things. Try to avoid that as best as you can. All right. Is there any solution for third party call center legit contract for overseas? The solution is not to do third party contracts overseas. And more specifically, don't buy leads from the offshore call centers in Pakistan, Philippines, India, or anywhere. The main reason why is because they are not within federal jurisdiction to be held accountable for sending you purposely or not leads that are on not on the do not call that are on the do not call list. I put up a Reddit post and actually filmed something earlier last week or the week before about an agent of mine that was sued for one phone call for $25,000 for one of these from one of these third-party offshore call centers, and he's going to have to pay something. He might settle and pay less, but because of one stupid phone call and he's not like didn't do anything nefarious, but he's the one left holding the bag because the rest of the people are out of the country. So my point is you can't trust this stuff and you can't hold them accountable to being trusted. So why would you even buy from these people? I just avoid it. I've got a person in the business used to work for me that runs a call center in the Philippines. I will not do business with him because I mean, how am I going to hold this guy accountable? The lawyer is going to say, oh, it's your fault. You bought the lead. You made phone calls. You did this. We're going to sue you for a bajillion dollars. Like, it's not worth it. Don't do it. Every insurance CEO does BJJ. Yeah, there we go. Who else does BJJ? I know the guy at AIL does it. Does MMA. Can new agents receive annuity training? You can actually go now, Deborah, and get annuity training for free. If you go back to that website I gave you, let me give it to you again. It is. You go there and then go on Mondays. Jess Fox does a training Monday mornings on annuity training. She's a multi-million-dollar producer, very good at what she does, very good trainer. All of that is completely for free. I saw in another video that there's $1,000 startup fee, correct? That's still the case, in addition to the $1,200 to get licensed. You could, yeah, Arias, that's his name. Other cost, $35 a month for insurance toolkits if you want to, and then $40 a month for errors and omissions. That's it. Okay. Any last questions for wrap it up? I'm gonna have to end a little bit early because I'm starving and I got meetings starting at 1. Anybody else have any questions I can help with? So again, as we wait for your questions, shameless plugging alert. If you're interested in joining the DIG Agency, go to davidduford.com. My name, davidduford.com. We specialize in training agents to sell final expense life insurance remotely from the comfort of your home. And our main benefit is we provide amazing sales training and also free leads. You don't have to buy leads. You can be new to this business or experience. We take both. You can be part-time or all in full-time. We take both there too as well. This is the perfect agency to join if you're worried about spending a bunch of money, wasting a bunch of money on bad leads, and you're looking for a way to do this business with the minimal amount of financial risk possible. We have the ability to have long-term career growth. If you're looking to be a broker and get higher commissions, it's a 1099, so you can work whenever you want to. Nights, mornings, weekends. We're open 8 a.m. to 12 p.m., 7 days a week. Maybe a little less on the weekends, especially Sunday. But there's great opportunity here. And to start your or work on leveling up your career in the insurance space. So again, davidduford.com. Watch the overview video there to learn more. And then also you'll see how to apply. And then attend a Q&A like this if you have more questions. We want you to we want to answer all your questions, so you're not wasting. We don't want you to join and then find out it's not for you. So come to the Q&A calls. I do these AMAs weekly too. Happy to answer questions. All right, you're welcome. Let's see here. Grant says, "Hey Grant, currently studying for pre-licensing. Thank you, appreciate it. Bank for hustlers. How much say the cost to get licensed in 48 states? Probably $5,000. I wouldn't do it though. I would get licensed in like 12 or less. Typically, if you're going to do remote sales. Yes, I have bank. AO. Yep. Stay away from Globe. Says say. Let's see here. Make it hard to contract. I went on the link for the free training and added my email, and during onboarding, I've received anything. Yeah, you should get something. Go back and put your email in again, Miguel. You maybe put it in wrong. Usually you get some sort of email that says, all right, you can join and get in. All right, ladies and gentlemen, thank you so much for being here. Hope you enjoyed the training. See you next time. Again, davidduford.com if you want to join the DIG Agency. Y'all take care. Peace.